Good morning. Happy Monday. You're watching Businessworld Live. I'm Danie Laurel. It's the start of a new trading week. Let's kick off with our banner story. Banks' bad loans surged in the month of April. That's as borrowers struggled to pay debt amid reimposed quarantine restrictions. Data from the Bangko Sentral show that non-performing loans soared by 84% to over 463 billion pesos. That's from 252 billion pesos in April of 2020. This brings the NPL ratio of banks to 4.35%. That's up from 2.31% in April of 2020. This NPL ratio was also the highest since the 4.37% recorded in May of 2009. Loans are considered soured or non-performing once they are left unpaid for at least 30 days beyond the due date. These are risky to banks' asset quality because borrowers are likely to default on these loans. Bangko Sentral Deputy Governor Chuchi Fonacher says the bank's NPL ratio could accelerate to a little over 5% by the end of the year. But Fonacher says the industry continues to remain stable on the back of sufficient capital. The BSP expects that at least 152 billion pesos in non-performing assets will be offloaded by banks through the Financial Institution Strategic or FIST law. The central bank has already ordered banks to submit a list of the bad loans and assets to be disposed of at the discount through this FIST law. The BSP expects the FIST law to bring down NPL ratio by 0.71 percentage points. Now, about 3.5 million economic frontliners will start receiving their shots. That's as the government rolls out inoculation for the A4 priority group today. A ceremonial inoculation will be held at the Mall of Asia. That's at 10 in the morning to kick off the vaccination of essential workers whose immunization is seen as critical for economic recovery. The government is looking to ramp up the distribution of vaccines as they expect a steadier inflow of COVID-19 shots starting this month. Yesterday, 1 million more doses of the government-procured Sinovac shots arrived at the NAIA. Vaccine czar Carlito Galvez Jr. said the country expects 10 million doses of COVID-19 vaccines to be shipped this June. That would include 4.5 million doses of Sinovac, 2.2 million doses of Pfizer, 2 million doses of AstraZeneca, 1 million doses of Sputnik V, and 250,000 doses of Moderna. Now recall that only 5 million doses have been administered since the vaccination campaign started in March, but the government is targeting to increase this to as much as 740,000 shots daily, in line with its goal of achieving population protection. Now let's open the market reports with a check on the banks here. Another record when it comes to the bad loans. And you can see, however, the financials holding steady. That's up by 0.03%, led by Union Bank, up by 1.8%. But our two biggest banks, BDO and BPI, suffering losses at the open here. Now let's take a step back and look at the equity markets. Now this after the US staged a record yet again. In terms of Wall Street stocks, you can see the Nasdaq flying by 1.5% on Friday. This as there was a jobs report there showing an uptick in workers' pay over in the US. Now checking in on Asia Pacific and whether that is spilling over into Asia here, you can see on my terminal here a bit of a mixed picture, but Japan staging some gains up by 0.4% this morning. That together with the Kospi up by 0.1%. Elsewhere, Bitcoin had traded around $35,000. That's after declining over the weekend amid a cryptocurrency crackdown, which is happening in China. Now, let's look at our own open and whether we've managed to sustain that. That doesn't seem to be the case. We're below 6,800 levels still, but just a touch of flattish at trade, but basically no change. This happened as we held steady last Friday. We were up by 0.06% after having seen quite a topsy-turvy rally throughout the week. And analysts are saying that shares are expected to trade in quite a narrow range this week, but with some upward bias. Now, this according to First Metro Investments, Tina Ulang, it's been a sharp rally the past week, and that was because of a much oversold level. And she said that highlights technical opportunities for investors. One bright spot here is the net foreign buying. And you can see some color green, finally, some bars there. That persisted a sixth straight day last week with net purchases on Friday at 1.1 billion pesos. So hoping for that, of course, to be continuing. And just a quick peek at our biggest movers here as we open the market 6 minutes into trade. GD Cap leading the gains here together with Pure Gold and RHI. But on the downside, you've got SM Investments dragging down the board. So here to chat with us about all of these market developments, we've got with us Regina Capital's Alvin Limlingan. Good morning, Alvin. Welcome to the broadcast.
Hello. Yeah. Sorry. There was a little
Hi, Alvin.
interference.
Happy to have you
Hi,
here.
Dan. Yeah,
Yes.
happy to be here. Hmm.
Let's talk about the index rally last week. What led to
Yeah.
that? There's a lot of mixed, sentiments on that. Some were saying investors were happy with the expected
Mm.
inflation print that we saw. Some are saying that maybe spillovers of net foreign buying from the Monde IPO, and some are even saying that presidential election excitement is starting to be underway. What's your take on that?
Um, we personally don't read too much into that. In fact, we think the market may have been overbought. I don't think it's election related. A lot of this was foreign money, and they don't monitor politics as closely as we do, and there hasn't been anything that definitive. If anything, it's really just the world awash with cash. In the United States, they've indicated that they believe inflation to be transitory, so rates won't be going up, and as a result, rates will probably stay low here to match.
Is that still holding with the new report in the US that the payrolls are now actually increasing, and that of course leading to a rally? This is there no more risk that the Fed might unwind or raise rates? Actually, the opposite, raise rates when all of these things, the economic recovery starts to boom.
Yeah, that's a really good point. On the surface of these things, it may look contradictory. So you have wages are rising, which will lead to inflation, but at the same time, the Fed saying that they will keep wages rising, which lead to inflation, but rates staying the same. And the key word here is transitory. So the Fed right now has shifted to a policy where they want to see average inflation over a certain period at 2%. So they're saying that, okay, it's fine, 2 to 4%. So they're saying, okay, it's fine that it's 4.5. However, on the average, it should shift below this. And if you believe, as they do, that it's transitory, then we'll hit that target. So that's the key word here, transitory.
What of the Philippine inflation and that print of 4.5%? Is that positive in the sense that you might see some demand side consumption already pushing that, as in the US, or is this still again a supply side issue? The pork prices or supply side problems here still there, especially as we are anticipating more transport to be happening, more
Mm.
importation of oil. How much risks are there to inflation, and how long can we keep these rates at record lows?
Yeah, that's a good point. Food prices certainly played a big role in this. It's hard to say how long it will continue to remain there because it's a question of science. So pork went up because of swine flu. So it's really hard to predict how soon we'll be able to bring this under control. And we're reading reports now of bird flu. So it's quite worrisome. But I think the immediate cause of concern would be rising oil prices. No, so we were the big beneficiary of oil going down, and now the reverse will happen when oil goes up. And it's June now, so we're halfway through the year. So summer is ending, and we're gonna go towards the winter months before you know it. And there'll be massive demand for oil in the first world for heating, and hopefully, OPEC may not have raised supply by that time. So inflation is definitely a big cause of concern, and we watch this warily.
Okay, so oil possibly a boogeyman here. Just checking in on our index, Alvin, from a technical point of view, you're seeing that rising above even the 200-day moving average and the 100-day moving average, and the 50 days. So
Yeah.
all three have been broken up. Is this a trend that is sustainable to you, given the inoculation speed and also the lower, at least lower than average cases in the past few weeks?
Um, Unfortunately, well, we're aware of that technical indicator, but unfortunately, we're a little more concerned and feel the market is due for a correction. Um, Cases haven't been going down that much. We checked yesterday; it was 7,000, so hardly that encouraging. And it seems to have moved to the provinces. So you have that now here in the metro. While we are in some sort of GCQ, there's still a lot of restrictions. I mean, restaurants can't really open at full capacity. I mean, you have staycations, but I guess the mood is not yet there. It's not like the United States where, there's confidence for the consumer to go out and spend. Here, it's still a little listless. So we think that side at least is still getting ahead of itself.
What's a catalyst you're looking at? Is there a number of inoculations per day, a number of cases per day that's going to make the investors feel like, okay, the reopening of the economy, actually the wheels are finally turning?
We don't have a hard number, and it's really more of confidence. In the United States, you'll read a headline that says something like 50% of adults have had their first vaccine. That certainly instills confidence. No? So there's nothing here. Yes, we're aware that vaccines are slowly trickling in. Yes, we're aware the scope is expanded, but nothing dramatic really has set in place for consumers to suddenly gain confidence and begin, purchasing again.
Okay, so waiting for something to be a dramatic shift, as you mentioned.
Yes.
Let's talk
Yeah.
about the Mondanisen IPO and how
Mm.
that might change the perception, especially of foreign investors to come back in, because we've finally seen 6 straight days of net foreign buying. Is that expected
Yeah.
to stay even as the IPO continues to be traded?
Um, I don't think so. I think rates will. I think net foreign buying will normalize soon enough. Now, this IPO was largely underwritten by foreign buying. That explains this number. And you can see that the price has corrected accordingly from 1350 to 1310 because foreign buying has slowly waned. No? The original foreign investors have slowly liquidated their positions. So we think it will return back to normal soon enough. We don't expect any dramatic movement in Mondenisen.
What do you mean by returning back to normal? And to what extent should retail investors be wary of a drop in price? Excuse me for my voice.
Um, well, we think there'll be a drop in the next few days now because the market was overblown. Uh, Foreign investors, we think, are avoiding the Philippines. Not really avoiding, but have found better opportunities offshore for the moment. If you take note, volumes are still not where they were. We used to have 9 billion in trading volume on a daily basis. Now it's 3 or 4. So locals have not taken up the slack for that.
Okay, is there a price that you're watching out for here for Monde to be entering? If it might be at 13.5 and it's now at 13.4.
No, we don't expect. Okay, the thing about Monde is it's not a high beta stock. It's in
Okay.
consumables. It's low risk, so
Mhm.
it won't go down by that much anymore. But in the same token, you can't expect a dramatic rise. So maybe a a little correction here and there would be a good time to buy it. It's nice and stable and something you should have in your portfolio, for the long term. But don't expect the high returns that a high beta stock would.
Okay, so not much volatility for Monde. And
Mhm.
finally, Evan, just on the banks, on our banner here, the bank
Yeah.
loans again. the bad bank loans rising the highest since 2009, and the BSP has done several things to mitigate this for the fist bill. They've even opened the FX position. I don't know to what extent that's helpful. But what is driving this? Is this just an expected lag effect from the closure of companies and firms that we've seen in 2020? And how long is this lag effect going to be lasting, especially now as the economy is starting to regain strength and you're looking at the corporate earnings?
Okay, several things there. First of all, I don't think this is a worrisome number. It's 4.35% of assets, but our banks are very well capitalized. So, there is a lot of buffers here. In fact, a good indication is though the FIST bill was passed, you don't have banks rushing in to put up corporation SPVs to absorb these non-performing loans. I think if they do sell, they'll sell at high prices, and uh, all the more their capital position won't be affected so much. It's very interesting, this position of the bank allowing increased of the central bank allowing increased FX
Correct.
reserves, forex reserves. One thing, well, several things. Number one, it puts them in a better position to take advantage of a strong peso, which also may be transitory. So they can, buy foreign dollar assets and then benefit as if the peso weakens. So that's there, especially with oil rising. That might be the smart move. Second, I think Filipino firms have increasingly opted for dollar financing
Mm.
um, to take advantage of cheap rates. You have lots of companies with preferred dollar-denominated preferred shares or dollar-denominated bonds. So if their FX positions were increased, they could take further advantage of this. I don't think it's so much a reaction to this increase in NPLs, but rather giving banks more flexibility to make money in this low rate environment, because these low rates are really impacting bank net interest margins. So banks have to find other ways to make money, be it from fee income, from trading income, and now a little foreign exchange trading income.
Very interesting. So diversifying from the core income into other
Yeah,
sources, like
yeah.
as you mentioned, trading and even forex reserves. There. Thank you so much. Great insights from Alvin Limlingan of Regina Capital.
My pleasure.
Checking in on the other headlines, for keeping our eyes on the Asian Development Bank is emphasizing the need for the Philippines to support its labor market to prevent long-term damage to the workforce. The lender warns that the temporary large shock to the pandemic might produce a persistently lower employment rate even as the economy starts recovering. That's why the ADB says the Philippine government must incentivize hiring to facilitate reallocation of displaced workers into their new jobs. Recall that 1.7 million jobs were lost in the formal sector last year due to the pandemic and lockdowns. To address this, the government implemented a 46 billion peso wage subsidy program to support employers in keeping workers at their jobs. Now, the tourism department is proposing several measures to further open up the industry. The DOT is now seeking to include all tour guides and operators in the A1 vaccination priority. That's after the health department agreed to reclassify hotel quarantine workers in the vaccine rollout. The department is also planning to propose green lanes or shorter quarantine periods for fully vaccinated travelers. The tourism department is also working with the DICT and DOH to consider deploying a QR code to help authenticate vaccine certificates. Meanwhile, local airlines warn that the high cost of COVID-19 testing could potentially delay the travel recovery prospects in the country. The Air Carriers Association of the Philippines told the Philippine Star that a government subsidy for testing would help ensure that demand would not be affected by these testing costs. Recall that the government has set a maximum price cap of 5,000 pesos for private labs and 3,800 pesos for public labs for COVID-19 testing. And that's the first look into the business day. Today is Monday, June 7, 2021. Catch Business World Live for the market close at 3:15 p.m. today. I'm Danie Laurel. Mask on, wash hands, stay safe, Philippines. We are One News.